When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
Good morning, traders. Welcome to Quasar Markets Live. It's Friday, January 16th. We've made it. The week feels like a month at this point, and now the market wants to sprint into the long weekend. With future setups looking pretty firm, we've got the Dow Jones up about 4 basis points, S&P up 17, and tech's leading the way. Nasdaq's up 50 basis points. How you doing today, BigBeat?
Good, man. 29 trades in a row, all winners. Look, it's been simple, right? This is markets. You just follow the trend and go against the grain, and it's been working, right? It's interesting that the volume is starting to slow down a little bit. I think people are kind of tired of losing money. So, we talked about it yesterday with Bubba and Jim Iorio, and to get rid of your silver because it's too high. And look at silver this morning; it's already selling off, right? The nuttiness in this market is just, it's a win-win for institutions. And that's what's happening right now.
Okay. Yeah, I don't know where to go from that one.
Let's go.
For me, I was looking at the open so far, looking pretty decent. VIX has dropped down again, but rates are raising up again. Market bond, you say the institutions, but the bond traders don't seem to get it right day after day. They've been on the wrong side of these trades, it seems like, time after time.
They are positioning right now, Howard. I had a nice chat with a very major bond trader yesterday, $1 billion bond trader yesterday, and he was saying that it's just a matter of time. They're positioning, the crash is coming, prepare. All hell's going to break loose. Now, look, that's their job because they're the bond market, right? But at the same time, he's like, look, you can't keep having these hires and, nuttiness in the options market and expect it to all just go your way. And I've already started moving. Most of you know, I already moved a lot of my money into Asian markets, which has been done very, very well over the last few months. Moved a lot of money into LATAM, which has done extremely well over the last few months. And continue to moving money. And I think one of the things that I started yesterday, we talked about this, with a lot of this winning, the money that I won with, that I moved money into real estate. Why? Oh, that's crazy. Real estate's dead. Well, that's great. I'm glad that you think that. The truth is, no, it's not. In fact, the opposite. Real estate is coming back. And I think as rates have come down, that we're starting to see more massive real estate issues. And we're going to hear the president talk in Davos next week about a housing initiative that he has for 401k, so that you can save in your 401k to buy a home. And that's unusual. That's different. And I agree with that. That's a very smart move, I think. And something that's been badly needed in this country. So yeah, Howard, I like this a lot. This is some good stuff. So I've been moving money into that. Yeah.
Okay. Awesome. I love that. Big talk yesterday, and the big headline mover was definitely chips after TSMC delivered strong results, kept that AI capex moving. Galaxy Digital also added to that with their big energy deal, signaling the way that in certain states, these data centers are welcome. Another 850 megawatts of power that they have to put into their capex, and they're going to lease that out to the hyperscalers. Made it clear, Mike Novogratz today, he's going to let them bid against each other. Energy seems to be the way.
Yeah, you heard this morning from CNBC saying, had a report this morning, and I'll post this here in a little bit, that this is the first year that the chip makers are not going to be able to keep up with the actual worldwide demand of chips, because NVIDIA and AMD are hogging it all. And also that makes a difference when it comes to energy. So all of those things are coming together. We have been talking about this for 3 solid months, Howard, and here we are. That's why we do what we do. You know, we're not talking to hear ourselves talk. We're trying to get people to understand what's really going on in the world. And now when it's come to roost, how do you make money off of that, right? And I think that's the key here. And that to me, that's a very, very big problem here with not having the ability to supply the chipsets that we need just for an average person. And we talked about this yesterday, right? We're going to have dumb terminals. And that's I think it's how it's going to work out eventually. And I think we're already working on that now. So, yeah.
Yeah, absolutely. And some of the names to keep there in the core, obviously, are TSM, NVIDIA, AMD, and broadband. On the supply chain side, watch it ASML, AMAT, Lam Research, and Clack. And then on the AI infrastructure adjacency, you watch Micron today, ANET, Dell, HPE, and then a different one. Look at VRT. They are powering a lot of this.
Yep. Good morning, Kim.
A lot of the energy names starting to run here. I see Riot, another one of the Bitcoin miners, popping off here, up about 7% on a partnership with AMD to lease out some of their GPUs. So it seems to be get ready for announcements in Q1 on a lot of these tech industry stuff. So it does look like, semis and tech look like they want to start driving the bus again there, Steve.
Yeah, 100%. I mean, that's part of it, right? And when we look at the semis in general, it's indiscriminate. I mean, they're just trying to get as much as they can. Just ask TSM yesterday, right? I mean, they did the best they could there too, right? So,
there you get double tailwinds as they also announced the trade deal with Taiwan, because TSMC is going to invest, a bunch of money here in the U.S. So that's going to help them also. On the other side of that, Steve, the death of retail, huh? Saks, done, bankruptcy drama. And man, this one isn't, I wouldn't be trying to buy a dead bounce on any of this stuff, because Amazon's writing off their whole $475 million stake. They say it's worthless.
It is worthless. We've been talking about that forever. I mean, look, go to a Saks Fifth Avenue and it's, I haven't been to Saks Fifth Avenue in years. I just don't go to Saks. And when you make these mergers and acquisitions, you better know what you're doing. You better know who you're buying. And it's I just felt like a lot was going on. So yeah.
Yeah, that Neiman Marcus purchase is basically credited with taking them down. So definitely a big one there. Amazon not getting hit too hard. They're actually up 41 basis points on a $500 million write-off. So it's good to be the boss, so to speak, there. And keep an eye on some weakness across maybe Kohl's and some of the other retailers, TJX today, on that news. Steve, staying on the president and healthcare, outlining his drug pricing and premiums, the ACA subsidy fight policy headline again. He unveiled an outline of what the White House calls the Great Healthcare Plan. The big market takeaway, drug pricing policy risk, is back on the front page, especially anything tied to the most favored nation style pricing and reimbursement pressure. So, Steve, if Washington is messing with drug prices, biopharma multiples compress, and managed care gets volatile, how are you going to play that?
As a biotech trader, I don't normally look at the companies in general like that. I look at what they're building and buying and doing and creating. Drug pricing has been an issue with the government and drug companies for, since the beginning of time. And because they are the biggest buyers of those drugs, right? Whether that's insurance or whether that's Medicare, Medicaid. Drug pricing has always been an issue because the drug manufacturers, in order to make new drugs, it's very expensive, right? I will say that AI will change that, and has changed that. Pfizer and some of these massive companies are moving to AI very fast. I just had that conversation not too long ago about it. I think some pharmacists and doctors are saying, no, it's not happening. It's happening. It's happening very fast. And I'll tell you that may be going into the mind of Trump, saying, okay, you know what? Let's upgrade the ability to pay. What do I mean by that? Well, they were looking to upgrade the computers at the IRS. Let's upgrade the computers and the payment systems when it comes to GSA and the payment systems around the government uses, right? To make
Steve, you remember at ABCA, we met with Medicare, Medicaid, and their chairman back about 7 years ago when they first started looking at blockchain technology to do this. They obviously weren't ready at that point, but that's what they're moving to speed up remittances and payments. That's the way to do it, blockchain technology. And that does have all the different sectors of healthcare down. Eli Lilly, Merck, Pfizer on that side, Novo Nordisk, UNH, and Humana on the insurance side, and CVS and WBA on the sort of, pharmacist retail side there. So it's getting hit on all sides there. Do you like buying the dip on any of those sort of sectors? Nope. Okay. This is one I didn't really think you'd see here. So, prediction markets, Goldman Sachs sniffing around them. The Goldman CEO, David Solomon, openly said Goldman is exploring opportunities in prediction markets.
I agree.
Leaders of two major platforms recently and basically hinted that these look like derivative style activity depending on regulatory structure.
100%. I agree. For a while. Prediction markets are hot right now. They'll be hot for a while, probably another year or two, and then they'll probably crash and burn like everything else in the markets like that. So no, I don't. I like the move on Goldman Sachs if they can push it, but if you're gonna bet on walking down the street eventually, right? I mean, like, is that guy gonna fall? I mean, are we gonna bet on Biden falling out of the plane? Are we gonna bet on Trump, saying something stupid?
Yeah, but if big banks legitimize prediction markets, that's a new on-ramp for retail flow.
The president is going to speak in Davos, and they're betting on whether or not someone's going to fart in the building, right? I mean, this is getting out of hand, right? And look, we see it already with silver, right? Kids are getting destroyed on silver right now the last few days, and they're going to get tired of losing money. They're just going to get tired of it, and when they do, they'll leave that. They'll go somewhere else, try to quote find new alpha. I mean, they're really this movement is like a herd. It's like a swarm of mosquitoes trying to find the next victim, and they found one for a while, and they're going to play with it for a while, and Goldman's going to play in that toy box for a while, and then the toy box is going to go away. Good example that would be the credit card from Apple, right? That was the new hot thing. The new hot thing was going to be options. Options got hot. Now options are slowing down again, and because of it, and I said futures are going to get hot. Guess what? Futures got hot, but they're tired of getting burnt in the futures market because they don't know how to play. Wait, you mean that they can raise the maintenance margins in the yeah, that's how it works. So this swarm of I'm not going to call them low because they're I get it. They're trying to make money, and I have no problem with that. That's what we're here for, right? Is the mispricing of pricing. But when you try to take over complete markets like this, it isn't going to work. It didn't work in the silver market. It didn't work in the gold market. It didn't work in the options market. The other side of this is taking the bets against you. So now you've got Goldman Sachs going, ooh, hey, I'll take the other side of that bet. I'll put out bets you can't win. Trust me, Vegas was not built on winners. It's built on losers. And so the same thing is happening here. When the banks get involved, when the Goldman Sachs and JP Morgans and the Cantor Fitzgeralds and those companies get involved, they're in it because they're in it to make money off of the people playing the games, right? They're not in it because they think it's cute and fun. They're in it to win, right? So no, I yes, it's going to happen. And am I happy about it? I don't know. I don't really care. I'm not going to bet on whether or not Trump farts in it at the Davos meeting in Congress Hall. So and I've been there twice. I'll tell you that's getting out of control.
Yeah, I would say the one thing that you did mention there is retail investors, and one of your favorite companies, Interactive Brokers, mentioned that retail individual clients actually averaged returns that outperformed the S&P last year by over 2%, and it's actually exacerbated here in the beginning of the year. So retail's not doing so bad based on what brokers are seeing in their accounts.
I'm going to tell you right now, they're doing so fine. They're doing awesome. My God, keep buying, keep spending money, keep investing, keep trading, keep doing all that. That's what the investors are saying. That's what big banks are saying to you. Oh, they're winning. They're doing. Keep going. Keep spending more of your money. Keep spending grandma and grandpa's money. Please, please, please. They're doing fantastic. They're not doing fantastic. They're telling you that to keep you trading, to keep you going, to keep you moving. I'm not going to lie to you. I'm going to tell you the truth here. Big banks are not telling you the truth. They're telling you, oh, you're doing so wonderful. Vegas is telling you, hey, get a card. Come hang out with us. You're doing awesome. You're winning. Let me give you a room here. It's because you're losing, right? That's what's happening to people, right? And that's what they're doing. It's not hard to understand that. And I'm not trying to scare people because I enjoy gambling every once in a blue moon. I enjoy going to a baseball or football game, putting 50 or $100 on a game and just for fun, right? To add to the excitement of it. I don't mind it sometimes. But look, my hard-earned money, when I'm looking to invest, no one's telling me how good or bad I'm doing. The only person knows that is myself, and unless I tell people, which I have been lately, because I'm trying to get people to understand this is investing. This is your hard-earned money. Invest the right way. Understand how the game works, right? If you don't know how the game works, not a problem. We'll teach you. But I'm not here to say, hey, let's look at your chart and tell you what the chart says. I'm not here to tell you, hey, the news just said this. Invest because of the news. Get a better picture. And I think, Howard, you did a very good job of that this morning. It's talking about that with chipsets and energy and explaining where the money's going, right? We told you that. CNBC just said it. AMD and NVIDIA chipsets cannot meet demand. Well, if there's demand, there's an investment place right there for you, right?
Okay, well, let's get into the next theme for February here. Steve, what do you think about a sports-first economics? Media and sports business, NBC Universal leaning into what they're calling legendary February. Winter Olympics, Super Bowl, NBA All-Star. It's major monetization test for Peacock and NBC's sports first strategy. You think they're going to succeed here?
Yes, I do, 100%. And normally the Olympics are a loss leader for NBC, and I think just like in most sports, I think it'll switch over to YouTube or something like that eventually, or Netflix. This is a big win for those. And I'm very excited at the Winter Olympics. I think it's gonna be fun. I think it's a break from all the nonsense. It's a time to.
Can we win the gold in hockey? That's all I care about.
I think it's very interesting, and I'm a big USA hockey fan. This gives the world a chance to pause a moment of all the crap's going on around the world and actually come together and understand that
together. Canada's beefed up with Tom Wilson. They're getting ready to fight on the open draw. They're saying, "Let's go to Chuck's."
I'm okay with that. Yeah. I like that, right? But the sports is a reason why we have sports like this, worldwide sports, is to show that we're humans and it's one human family, as we say in Key West. So look. This is nuts. I love this, and I'm excited for the Winter Olympics. It's coming up in about 3-4 weeks. I'm looking forward to that change of pace from the craziness of Russia and Ukraine and China and Greenland and blah. You keep going on, right? And the nuttiness of the administration. So I'm looking forward to this, and I think it's going to be a very big win. And I think because of that, the world's tired, and I think the world wants some good. And I think it's going to be very, 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 very well watched, this one.
Awesome. And CMCSA, obviously the cleanest expression to do there. But keep an eye for sentiment read-through on Disney, Warner Brothers, Discovery, and Netflix. Different models, but the same attention economy. So that would be the plays there. Steve, PNC, banks, like we said, financials, yesterday's, they were the second part of the leading us into a stronger day. You saw Goldman Sachs, Morgan Stanley with good earnings led us there. Today, PNC reported a strong quarter, profits up, revenue strong, and Reuters notes net interest income improvement plus capital market advisory strength. You buying here these the next level of banks below the big three?
No. I mean, I think Regis Finance RF is about the only one I'm looking at, but to be honest with you, not really. No.
Okay, well then, ding, ding, ding. I caught you. They're down 2.8% here, Steve. You ready to buy them today? I got you.
No, I mean, look, I don't care about the 2%.
No. I mean, I'm being honest. It was more. I just had it on my list because.
I got it. I like that. 2% to me.
I like where they're at. I think they've got a little more downside maybe today, but They're one I'm asking because, I know that Jay Woods is a big fan. I know you've been a fan of them. You think they're part of the merger and acquisition scheme? If you are, we're talking about themes. Do you look at it on a day that it's down 3% as regionals are getting hit a little bit?
No, I'm all for RF. I mean, I think it's a good company. I think they're doing well. Look, just because they got down 2%, I mean, that's so what to me? That's cool. I know I'm not even scared at all. In fact, I'd probably buy it more here. It's not.
Okay. And they logged a flat profit in Q4. They just announced the parent, Regions Bank parent, on Friday reported net income of $534 million, 58 cents a share for the quarter. Very similar, like I said, very, no up, no down, just flat. That's what has them down today.
Yeah, and of course I'm not buying it for that reason. I'm buying it because I think it mergers and acquisitions. That's why we're buying it.
Absolutely. So that's one I wanted to check in on here. We are about 8 minutes from the open so far. Advanced declines up 12.21. So we're seeing a little bit of breath in the market. As I mentioned, all three indices are, well, let me just double check that before I say it. Yes, they still are slated to open in the green, although the Dow Jones is almost flat on the day. NASDAQ is leading the way, showing tech has the lead so far. Steve mentioned silver pulling back below 89 here, down about 3 and almost 4% today. Gold holding up a little bit better, only down 0.25 percentage point. Crypto, Bitcoin back below 96 in the mid 95s, and Ethereum at 3,300 there today. And the 10-year is up almost 0.5 percentage point now. Wow, Steve, big jump up by the 10-year here this morning. It's moved from below 4.15 yesterday in the pre-market to almost 4.2 here. So that's a pretty big jump without much data in the lot since that time.
Yeah.
What does that tell you?
I don't really know, to be honest with you. It could be something that's on the inside. Insiders are looking at things that it could be a play. Look, I like those kind of things, right? That helps us when you look at what I call unusual options or unusual plays like that. I want to know behind the scene what's really happening,
right. Something's got to give here, right? The 10-year can't be up 0.5% and tech be up 0.5%. That's the most risk on versus the most risk off.
And what's interesting? You talk about it, the perspective, but the number. If you look at the M2, which is the money of right into the system, and the separation of M2 from the actual stock market where we're at 336% deviation. Folks, it's higher than the worst time in .com.
And Schiller, one of your favorites, Schiller Price Index is at, huge above statistical norms also, I saw.
I looked at K-Schiller because I knew we had been so far out of the range there. What Howard is trying to tell you is the K-Schiller PE ratio. If you can I can probably pull it up for you here. I've got it in front of me. If you want to, I'll share my screen.
I'll move mine. There you go.
Let me show you what Hondo is talking about here. This is the K-Schiller index, folks. This is the .com here. I mean, this is where we're at now, 40.83. This is not normal. This is not. We're way out of the range now. Okay. Average, mean, and median here is between 16 and 17. We talk. The max is 44, and that happened during .com. So where are we? This is why I'm telling people relax. You don't need to go out and continue to buy and buy and buy and buy and buy. This market is way out of whack. We are over our skis. What does this mean? It's the price divided by earnings. So people say, oh, well, earnings are coming out again. They're going to be better, and they're going to push. Well, okay, maybe, but not enough to you have to double earnings. You have to double earnings just to get back to somewhat overweight. Not even to the point where we're in the mean or the midpoint. So this is really wacky. The last time, look here, 1929. I don't need to tell you guys where it's at. Right there, it is in October 29. There it is, 31.48. Okay. You look at all the bad times in the world. There it is, 37, right? When Germany, I don't need to explain that one. 64, 65. When we went back down, what happened November of 65, folks? Kennedy was shot, right? And then there's your .com. And there's their COVID when it got out of COVID, 20, and then of course today 26. So when people tell me, "Oh, we're going higher and the markets are higher and we're going to," just stop, because it's I'm not. It could. I'm not going to say it's not, but this is not normal. We're way out of the norms at this point.
Oh, I just see a big switch here. Jensen Wong, who has in general been not negative on the California billionaire tax, just came out and said something. Oh no, never mind. He's not worried about it. I read that wrong. My screen's too small on this one. Sorry about that, everybody.
Gotta get screens, my man. That's the point. Yeah.
I do. I split it into one screen into 4, and I shouldn't do that with my tweet deck because I'm blind.
No, not at all. No.
Yeah, I'm too
small. Yeah, my tweet deck. For those of you who don't know, we have a tweet deck. I've got a very curated tweet deck. I even give it out for free. Anybody can use it. I have a 60-inch screen in front of me. That's what I look at it now, and the top section of that is nothing but my tweet deck. It's how I'm able to catch things as fast as possible. So I don't have one screen. I've got 2, 4, 5, 16 going down at the same time. So I don't miss things. Sports, weather, news, financials, White House, Wall Street, CNBC staff, Bloomberg staff, military, defense, politics, and of course my little beloved Cardinals. So and of course I have AI as well in my system. So yeah,
absolutely. Okay, we are 3 minutes from the open here, early morning, or gainers so far. Micron up about 5%. ASO, I didn't mention too. We do see the space names low Earth orbit. ASTS FLY, Steve, has up at 30 nowadays. There, by the way.
ASTS, another one that we like here too as well. Yeah. And of course, my fun one that I've given everybody a fun one out there is SSYS. I've given everybody that several times, and SSYS is up again. So I don't even know what it's up now right now. Yeah, it's up another 6% today. It was up 14.7 yesterday, another 6 today. Right. So I've given everybody SSYS. That was a fun one for everybody to play with. Qs are really kind of pushing this morning.
And defense names are pushing up across the board too, led by just a bunch of them. So just a bunch of those defense names, especially the smaller ones on the Golden Dome side, ONDS and others are also up 4 or 5% today. On the laggards so far, JP Hunt came back with less than stellar guidance for the rest of the year. They're down about 3%. Mosaic Company down about 4% after they announced that their North American phosphate shipments are going to be down tremendously. Yesterday's big mover, Talent Energy, to the upside, now down about 7.94. Steve, I saw Devon Energy. I didn't see what's going on with their price. Might be in merger and acquisition talks, might become the largest shale miner out there. So
yeah, we talked about Devon Energy yesterday. I love Devon Energy. And I'll tell you something else. I'm watching uranium prices at the highest of like 5 years. Market's about to open here. I am probably going to short Tesla a little bit here, I think.
Okay.
Let me just look at Tesla here, but I think I'm going to be doing a little bit of move here on Tesla. I think it's yeah, damn it. And I can't move fast. And I'm not paying attention here.
And the market is open, everybody. First move on the Qs, slightly to the upside.
440.84, 441.30.
Back a little bit. Small caps open up slightly to the upside.
And I am submitting my order now. So I'm in at 441 something.
Nice.
Oh, no, yeah, I'm trying to get in. It's moving pretty fast here. Oops. See where I'm in at. Yeah. 440. Ouch. 441.17. So let's see if I can take that. Yeah, there we go. There we go. Nice, nice, nice. All right. Yeah. And by the cover. Yep.
Tick down about 300 here. Advanced declines come back to pretty neutral on the day, 246. VIX continues to move to the downside, down about 2.46% at 1544 here. We do see the DXY is popping up a little bit on the cash open so far. Back above 99 here. We'll have Mr. Flanagan in soon. Silver's move a little bit to the upside here on the cash open, back almost at 89 here. Gold did drop below 4,600. Bitcoin first move was to the upside, but that quickly retraced right at that 95,500 area. And as I mentioned earlier, oil is on the upside.
And Howard, obviously, I took that profit and ran. So, what? No. Wait, I'm still trying to get a. Hold on. Nope, I didn't take it. Did not lift me. Ouch. Let's try it again. Oh, wrong way there.
NVIDIA up about 1% here this morning. So we do see chips outside of Qualcomm are still all green in general. Micron continuing to move to the upside, now up 6.74. So MU looks like the runner here this morning so far.
Qs are pulling back a bit here.
Galaxy Digital up another 2.66% here. CoreWeave, Steve's fave, up another 3% here, Steve.
Yeah.
Figure up another 7.6%. The stablecoin company continuing to skyrocket after a couple of analyst upgrades there. Riot, I mentioned earlier, on an energy contract combination with AMD to get some of their they secured a $311 million AMD lease program. So they're up about 7.6. They have room to run here.
I am shorting more Tesla here on this high here.
Bitcoin holding up pretty well so far. Solana actually outperformed Bitcoin and Ethereum yesterday. We'll see what we get today. ASTS now up 10%. ONDS another 10% to the upside here today. NVTS, Navitas Semiconductor up 5% here. Rocket Lab up 5%. So those names are the big movers so far. Early morning laggards, we do see a bounce back nicely by JB Hunt. Continuing to the downside. Talon's retraced all of yesterday's gains. Albemarle also down about 5.57. So we do see more weakness across miners, not just the gold and silver themselves. RF, we mentioned Regions Financial earlier, down now 3.68, continuing to move to the downside also. We do see some names bouncing back. Integris up about 1.29%. They had lost some of those gains. That's the company doing the wind projects that got the court sided with yesterday. So do keep that in mind. Looking at the sectors of the S&P so far, tech is leading the way, still up almost a full percentage point. We also see industrials up almost a half a percentage point. On the laggards, utilities down 1.22%, and we do see material sector down about 80 basis points so far today. Constellation Energy now down 7%, moving to the downside here. So energy continuing to get hit pretty hard. On the other side of that, financials, BlackRock up to the upside, another 1.6%. after a strong day yesterday. So they're continuing to move to the upside there. Costco, a little bit of a pause here after the strong performance we've seen there over the past week. Fly now up 11.4% here today. Oof, I might have to take some profit there. Yeah, we gotta.
Yeah, silver to 89.50 now.
And nice little bounce back there.
Tesla pushing higher here against me.
Yeah, looks digital.
Maybe that's the end of it here.
Palantir, nice little pop here today to the upside. Let's see if that can hold on for us. Quasar Live, what are you guys trading this morning? You following BigBeat short? You going long? What is everybody looking at so far?
There you go, Howard. Very awesome.
Congratulations, Zora. Good. Amazing. Now don't overtrade.
Don't overtrade.
And that couldn't be more proud of you. What do we got going on here today? Man, UNH doesn't like me lately.
Yeah, UNH is just one of those. It'll just do its thing for a while, and then it'll be like, oh, what happened there?
Tick is remaining negative, advanced decline down 1,000. Do want to remind you folks at Quasar, we will not be here Monday. It is Martin Luther King Day. Markets are closed.
I'm actually doing a podcast for Jeremy Newsom on Monday.
Nice. Gold breaking back above 4,600. So we are seeing a bounce back on the metals here this morning. So we are seeing some buyers step in here.
Tesla's pushing up, yet the whole market's falling down here. So something's got to give here.
Yep. Qs are off the highs of the day, but still fairly strong so far. Fair back below 3,300 here. Micron now up 7.7%. As I said, strong. Seeing a little bit of profit taken across ASTS and Fly. I mean, I can't argue with anybody who did. It was up, over the last few weeks, 30-40%. Got to take some profits when they're running. Lam Research still looking pretty strong today.
I love Lam Research, LRCX.
Seeing Immunity Bio up 12.4%. Now the leader on the day. Riot's up 8.33. As I said, that one has room to run today. Every time there's been news in these Bitcoin miners with combination of the AI data intersection, they've taken off. That's what's got Galaxy moving. That's up 8.33% here. GE Verona up about 5.74. The same thing. Quanta Services, PWR up 5.56, so that's getting some love. ONDS, I mentioned, Ondis up about 5% here this morning. Insurance company Ambarella up about 4.74%. Moderna up 3.2%. 86% here off highs of the day. But Moderna's made a nice little comeback here recently, Steve.
Yeah. Making those vaccines.
Yeah. And we do see chip sector leading most of the green. ASML, AMAT, LRCX, like we mentioned, all those companies, ALAB, SMCI, they're leading the way today so far. Taking a look at the laggards. Talent Energy, as I mentioned, down. VST, so nuclear, I guess nuclear is done, Steve, down 7.88%. Energy in general getting hit pretty hard today. CEG down 7.2%. You think, Steve, is that a direct reaction to the president who want, I heard out of the White House, we didn't get all the way to that today. They want the mega caps, the mega tech to pay for the new energy infrastructure across the U.S., so to speak. There's a lot of money that got to be spent to build out these new power plants, and they don't want it to fall on the different municipalities. They're looking at it to be paid for and picked up by those companies. Is that what has this going down today?
Yeah, I think there's some feeling to that, but it doesn't matter who's paying for it, right? It's still the company that benefits, right?
Well, I think that what they're saying, it's competition. In other words, build their own energy production, and then I don't need CEG as much. I don't need VST. I become what we just saw with Galaxy Digital, the reselling of energy, so to speak. But they're, the same way a Riot is the White House energy in Texas, so that they own the power plant and now they're the energy provider. So I wonder there if that's the play.
It's kind of quiet here, actually.
All that back
there we
down.
go. There we go. Mr. Kramer's talking about Tesla now on CNBC. There he goes.
He'll talk it down for you.
Thanks, man.
NVIDIA up 1.5%, continue to move to the upside. Ten-year 4.191 here. And we see a pretty big pullback across the industrials. They were one of the leaders this morning. They're now only up 0.5 percentage point. But what I will say is energy's rebounded. One of the biggest laggards now up about 17 basis points. But the main winner still today has been technology up 80 basis points so far. Healthcare now, well, no, excuse me. Consumer staples now the biggest laggard on the day, along with utilities. So it's been a whipsaw day. What was up early is down now. What was down early is up now. So we're seeing.
Well, that's what I'm saying. This is a market that you really just can't really pinpoint on it right now, and that's why I'm trying to take advantage of some of these moves.
And we do see Amazon, Apple, and Google, along with Netflix.
Views are still falling here a little bit.
Wow, Netflix back below 88, Steve. That one's really falling off.
Well, they're talking about it now on CNBC, so do the math.
Yeah. Tesla's moving to the upside still, 446 here.
Views are dropping even more here.
Yeah.
Could really drop here. Dow down negative 30 points here, but it's kind of quiet. Okay, there goes Tesla now a little bit.
Bitcoin struggling still, back at 95,350 here. Challenge the lows. Did get back above its key spot there, so.
Tick just popped a little bit. Bitcoin's really struggling at the 95,300.
Yeah, it looked weak today. Looks weak today. That run, we didn't get any spot volume to back it up, and it's falling on decreasing volume. Tick has finally gone positive here. Advanced decline down about 1,000, but moving back up from lows of the day, which was down 1502. We do see a nice little bounce back by the S&P, now still up 22 basis points. And the Qs bounce back off of their lows of the day, or the cash market up to 624.62 here. And the small caps just took a nice little bounce to the upside there.
Yeah.
Gold 46.12 still moving to the upside. Same thing with silver, continuing to grab some market share here again today. Nvidia down 1.5% so far, or up 1.5%. Sorry. Coinbase, nice little bounce back here this morning.
Yeah, I thought Robinhood, this, yesterday's sell-off seemed a bit outrageous.
I'm with you there,
but not quite. It's still falling here this morning. So I mean,
yeah. The fact that they're delaying the vote, it's only going to be delayed a month, maybe, and it's a good thing, not a bad thing.
Right, yeah. and you look at that and you go, oh. It's retail. Oh, they just can't stand it. It's like they just can't hold. They have a hard time.
Yeah, yep. That is one in my long-term holding. As you know, they're going to be one of the both of those companies, Robinhood and Coinbase, are going to be super apps that are going to be part of the bigger picture down the road. I heard Mike Novogratz had a couple of good lines though that I thought were interesting today on CNBC. The banks are really putting the lobbying behind or against the crypto bill. They don't want stable coins to be able to earn interest yield. And of course, the reason being is they pay out maybe 11 basis points, in interest on your savings. And these neobanks and stable coins want to give you what you deserve, 3-4% on your stable coins. And what they're saying, of course, is people are going to choose to take all their deposits, and they're really leaning on the community, using the community banks as the rallying. So they're trying to get.
Well, you heard from Coinbase CEO Brian Armstrong saying that the banks are the ones that are against the crypto bill.
Right, exactly. The lobby, because of that, they have a moat. They want to pay you. A big part of their profit is paying you 11 basis points, and then parking your money in the Fed for 4 basis points, for 400 basis points. So, that's what they do. So, and they do not like this at all. But Novogratz pointed out, bank deposits are pretty sticky. They're overblowing this, in his opinion, because you could already go to the neobanks, the SoFis, to earn that yield. Right. And it isn't, doing that as much. Okay, I see Mr. Flanagan's in the room. Let's get him in here. Let's see what's going on in the world of Forex. How are we doing today, Steven?
Good morning, guys. It's a ho-hum type of day, but yeah, watch out there, because the Minister of Finance of Japan has come out, Mr. Katayama, and he has said all the options are on the table.
Oh, no.
For the dollar-yen. Present moves are excessive and do not reflect fundamentals. That is, those words are the G7 words for I am now allowed to intervene in the market. So dollar yen has taken a little bit of a pause. And I tend to think a pause might be the best strategy on a Friday right now because, I've been listening to the show. You guys have highlighted silver and other things that are moving. Yeah, things are getting a little bit stretched, but then again, more and more people keeps being talked out of getting into the market. And FOMO is probably one of the worst things you can trade on. So
but they're doing it.
Yeah, what is interesting, though, in the currency space, tick data came out yesterday. Foreign holdings of U.S. treasuries have now hit a record 9.355 trillion. And that's increased from October, where it was showing a net outflow. But what am I trying to draw an analysis? You guys know I've been talking dollar mex as the fundamentals in Mexico have been weakening, and I've been long dollar mex. I cut myself out on a break of 1786 of my dollar, disciplined. I got to stick to my discipline trading. We've gone down to 1761.94. I can't figure out the excessiveness of this buy MEX, sell US dollar. But then putting it in perspective, the MEX, as we've been talking for a year, since interest rates were 10% and are now at 7%, the MEX is the parking lot. So even if you increase your US dollar exposure, you quickly hedge your North America exposure by buying MEX. And I believe that I finally have linked now directly with an inflow into the US and MEX now surging. So I got stopped out. 1765.45 was the close yesterday. We're above that now at 1771.90. I have reestablished myself overnight in a very small position, a little bit lower once we came back above the closing level. So that's my spiel on currencies right now.
Okay. That's my spiel. What do you think? What do you think going into Davos here, Steve? I got to ask both Steves here. There's going to be is next week. The central bankers. They're all your buddies are all together there, guys. Who are we listening to? Who are we looking for? What are we looking to hear? What are we looking under the currents? What would you guys, as the experts, be looking at that maybe?
Well, I know I know Kalshi is concerned about whether or not somebody farts in the Congress hall.
No, but seriously, you guys are guys that know what to look for under the currents here. These, we're trying to give our folks, an idea.
The truth of the matter is, I think people will walk out of the Congress hall when Trump speaks.
Okay, well, that's something to look for. That's a great insight for our traders to look at. I'm just, for me, I want to see what Jamie Dimon, I always like to see what he says at these things. And it's where I think he tends to pontificate the most. So I'll be watching for what he has to say. And I'm also curious to see, what Lagarde has to say, there, which I'm not usually, but this is usually her, Bretton Woods moment in my mind.
My view would be anybody walking out, Steve, of that hall, I would sell that company or stock.
I do like that call. I get it.
I think you're maybe right. He does a lot of play on that.
The trading insights that we're trying to get across to people.
And I'm not taking that.
Exxon. Yeah, I think I wouldn't be an Exxon guy right now with where that is. If he picks winners and losers.
Yeah, I'm not trying to take a political side there. I'm just simply saying, along with my quantum convergence, the United States is leading this tech revolution, and I think people want to hear it. Reluctantly, I agree with Steve that people may walk out, but if you want to be part of a leading edge, then you've got to sit and listen. The fact of the matter is the World Economic Forum has failed us in many, many respects as far as an elitism of leading, because
I think that's changing, Steve. I'm a member there, and I'll tell you, it's changing. When I hear people say oh, well, it's the Satan worshipers of the world, and it's the nonsense, and it's the rich people trying to tell poor people how to live, and I've heard it all. And then I go there and I don't see any of that, right? I mean, I'm in the mix of all of that, and I don't see any of that. And what I see is people that really truly want to help the world, that really truly want to fix problems. And when I hear that, and Trump missed last year, he specifically said he didn't have enough time to go. He wants to go this year. And I said on the show earlier that I think he's got a very good proposal for housing, this 401k plan. And I think that's a really good plan. But let's be honest. I mean, he's not really well liked around the world right now. I mean, he's the up, as you're saying, quantum convergence. It's hitting hard in a lot of countries. Denmark is not a very happy country right now with the president. Russia's not very happy. China's not happy with tariffs. Japan's not happy. I mean, there's a lot of problems here.
Well, in that sense, I don't think the elitism I refer to, has anything to do with those type of things. On elitism is that it is, very much, speaking from the bully pulpit down to the masses of people, and not being down and understanding a lot of the problems that specifically immigration has caused to a lot of countries. And I don't need to belabor that, but if you just look at a number of the cities within Europe, the amount of immigration has actually, absolutely stripped away any of the nationalistic or national population, not nationalistic, but national population. And it is causing problems in the inner cities of Europe. So that's where I refer to, they've been a very strong proponent of that, and there are good reasons for it. I understand in sharing and dispersing some of the advancements. That's going to happen as technology forces this convergence of many industries that then opens up to all countries. That will happen. I just think that the policies that are being reflected specifically in Europe will be under attack. Although, having said that, you did get the UK to put a plus 0.3 to their GDP growth from minus 0.1, and you had the Eurozone industrial production actually surprise people by 0.7 on the upside, 2.5% on the upside on a yearly picture. So in general, inflation has been beaten. Germany's CPI 0% for December.
0.
So not a bad preview. Some growth in Europe is beginning to show. And that's
sort of why my Lagarde thing is I want to see if they're signaling, hey, look, we did it better than you did, Powell.
Yeah. Well, I think Lagarde is going to, she's probably the most masterful central banker. When we talk about Fed speak, it's about saying things that nobody seems to understand, but they wiggle right through. I think she'll throw it right back into the governments of Europe as to where the problem is and where the stimulus needs to occur. She's going to say, I'm at 2%. I've reined in inflation. It's your turn. And then that becomes a critical problem in Europe, because you've got countries like France already running way above the debt to GDP ratio. And for them to do fiscal stimulus is really going to put them in a difficult position, because Europe runs under a Maastricht Treaty, which means you cannot expand the fiscal side beyond your a certain percentage of your GDP. So this is a fundamental flaw within Europe that Europe is going to have to address. Otherwise, they will fall further behind in this technology boom.
Yeah,
so, that's without a doubt.
I apologize, as as everybody knows, I'm watching Tesla getting smacked here. So yeah,
he's trading. But let's bring it home. Back to the U.S. The dollar is 99.27 in the index, the dollar index. We're just above 99.14 last week's close, a pretty good positive. We've taken out all the highs 99, 26, 25, 23, and again 25 by punching in 99.49 yesterday. Technicals look pretty good, but it's overextended. And that's when I bring in the Japanese comment, because they would push the dollar down. Just be a little sensitive here. Numbers in Europe suddenly positive. Japan threatening intervention. Probably a good time to pause and look for a 99, a 98, 50, 70 zone on a dip to get back into the dollar, because I believe 2026, it is the dollar trade. And I muffed it up pretty good during 2025, although I stuck true to my disciplines and adhered to my risk tolerance levels. So I didn't get too beat up. In fact, I actually ended up small plus on the year, but I would have liked to have grown that more in currencies. And I think this year could be a good year for the dollar. So watch that. You've got the Fed Schmidt talking right before the blackout period. Monetary policy needs to be kept modestly restrictive. Bostic yesterday, we need to stay restrictive. And then we got to look at Warsh, who's, maybe the next Fed governor, where he's coming out, and his comments recently says that the Fed needs to abandon its, dogma that inflation is caused when the economy grows too much. It's gone. And he referred to AI and the deflationary forces, significant deflationary forces. So the Fed needs to get lockstep in tune with the administration. That does not mean ruining their independence, which I am not for. However, they need to be held accountable. And that's all I'm looking at.
How do you hold them accountable? I mean, we've got 3 members who actually broke the law when it comes to their mortgages, and we can't hold them accountable. How can you hold them accountable?
Great question, Steve. And I believe, I don't like the Department of Justice doing the subpoena thing. I didn't. However, accountability is they asked a bunch of questions 3 times and the Fed ignored them. Now, I know you guys have highlighted that kind of is the Washington thing, but wait a second. The Fed just can't sit out there on their own and have no accountability to the people. And let's face it, since, 2008, while they were forced to get involved, but the Fed was monitoring, the New York Fed monitors all the banks. And they dropped the ball in 2008 because they saw everything happening in real time. Are they
dropping the ball now, Steve?
Yes. They've lowered rates, but they've been dragged to lower rates.
Yeah. And I'll tell you, we just showed the Case-Shiller S&P PE ratio, and again, it's an almost all-time high. Last time we had this kind of high was during .com. So I mean, the Fed is hyped these stocks up. All right. I mean, we're too far out of the whack now.
I don't like those models, Steve, because those models don't incur and don't take anything into effect today. They all look, and back then, yep, we're back at those levels, and people then say that means bad stuff. Not necessarily. The ingredients are totally different today. So I think the Fed's dropped the ball in the sense that, it didn't take the ECB long to get themselves down to 2% interest rates. I don't think the Fed could go there. I think the U.S. rates probably should be closer to a 3% handle, maybe 3.25%, 3.5%, than where they are today. But I think the Fed needs to start supporting the economy, because if you constantly look at the negatives, which they do, then we never allow it's all my thesis is growth is the way out.
Oh, I agree with that. Yeah, growth should be the way out.
Absolutely.
So you grow your way out. You grow your way out of all your debt problems and everything that these people are obsessed at looking at. Inflation. Grow your way out. Let the genie out. Let the productivity gains continue, because they are deflationary. And I don't think that the numbers in the U.S. at, depending on what number you're looking at, PPI was up 3%, but CPI was down 2.6. To me, you're in the ballpark. I mean, I don't arbitrarily, where are you coming with 2%? Again, based on a historical view,
the NAHB number came out 37 versus 40 expected. So the housing market's getting even walloped even more. So I can understand why Trump's want to talk about the housing market. And it is pushing markets down a little bit. Dow's down 100. NASDAQ's trying here, but nothing's, it's all pretty quiet this morning. 442.16, 442.10 now on Tesla. I'm now in the green, but not by much here. But this market seems pretty quiet today.
Yeah, you unleash the housing sector. You just put another massive piece to the economy at play. And, at our age, we look at housing, if we've owned a house for 10 plus years, we've done pretty well.
Right.
And how do the kids today who want to be a homeowner, who want to start a family, how do they buy a home at
they're priced out of the market? Yeah, of course. Yeah.
Especially when a lot of jobs are in the urban areas, and the urban areas, you can't create more houses. There's a limited supply of
you live in Florida. They're making them as fast as they can make them down here.
Wow, man, Steve, I'm blown away with the housing. You drive down, these highways and you look on the side of the road and gosh, there must be 50 to 100 units. They've all got the cement slabs in and they're beginning to build them. And you're just like, where are these people all coming from?
Everywhere. I mean, it's cold today, folks. It's like in the 30s down here, but yeah.
30s. Whoa.
Yeah.
We hit 28 overnight here, and I'm in the northern part of Florida, so got to protect the palm trees.
Oh, I feel so bad for you guys. I deal with snow on a daily basis, you babies.
All right.
Well, you made that silly choice.
Yeah, I did.
I'm going to really hurt you. It'll be at 60 degrees by noon here.
Yeah, I know. Yeah. Well, we like to do 4 seasons in one day, though. You guys don't get that fun.
That's true. That's true. And let me tell you, Howard, as a native New Yorker out on Long Island, I don't miss the snow.
No, God, no.
Now, I don't know if I actually was Flanagan. Are you a Giants or a Jets fan?
Jets. Jets.
I was gonna say, man, if you're a Giants fan, you gotta like getting John Harbaugh.
Yeah, that's a great move. I'm a New York fan, so yeah, I'm holding out. Go Buffalo, go Buffalo. But I'm a Jet fan, a Yankee fan, an Islander fan. It's funny when you talk to a New Yorker. What's your mix of teams like
Absolutely.
that you like?
And it's fascinating to me to kind of see how it plays out, because it's, everyone always says, oh, no, if you're from Long Island, this is it. But no, I found that's not the case. It matters how old you are to know which teams were good when you were in those formative years.
So true. I mean, I used to be a Net fan in basketball because they played at the Island Arena close by the house. I used to watch Julius Erving, Rick Barry when I was a kid play.
Oh, wow.
But when they moved to Jersey and then back to Brooklyn, I was like, nah. But I've held my roots to the Islanders. But like the Jets, you're living in the past, Go Jets, 1969 with Joe Willie Namath. I've had nothing ever since.
Yeah, well, I'm a Redskins fan. I can tell you all about it.
Okay.
John Rickens.
We are closing in here on this Tesla short here, boys. I'm trying to get some money out of this thing. So
how do you play the weekend here? You got to have a little bit of volatility on, right? You got to get into some of the indexes as a defensive play. Weekend risk is difficult. You can't trade until Sunday evening if you can trade in a futures market. But otherwise, you got to sit and wait for, too much risk in the world today. So,
yeah, there's a lot of stuff on both sides here that are, that just is downside risk, upside risk on all across the board. You don't know what's going to come out. What's that, Steve?
I might take my very, very small loss here. Very, very small loss on this. But I don't want to call it my first one. Well, maybe not. Maybe not. Yeah, maybe not.
Tesla's a unique one, Steve. I know you love to get in and out of that, and I know you sit and trade it right in front of you. I'm a long-term bull on that one.
No, I think it's long-term. I think so. I agree with you on that.
It's a unique company because they have a foot in every single space that goes into this quantum convergence that I've talked about, and they're one of the ones that I don't know where you want to put a high at, but I would think that in the next 2 to 3 years, that company is, well, let's just say Elon Musk's salary is set for that.
There you go. What else you looking at here, everybody? Steve, anything for the weekend?
And I just took my profit, $400. I mean, it wasn't worth my time, but I took the profit and ran. So, the
profit's a profit.
There you go, sir. Okay, everybody, for Quasar Markets Live, have a fantastic weekend. Everybody, we won't be here Monday. Reminding you, Mr. Flanagan, also, we won't be here Monday. We'll be back Tuesday morning to bring you all of the latest updates and talk to you how to trade. Thank you for all the great information, guys.